morning bell rings. When the bell goes off and fluctuation throughout the stock market starts, I would like to show you the portfolio and how it's reacting um, in live time. So, good morning. Good morning. Very good morning. So, let's take a good look at the portfolio in Robinhood. Now, this is investing for beginners. So I chose Robinhood because Robinhood has a interface that is, I think it's easy to understand, and I also think that it's the way that it's displayed, the application is displayed on your phone. It's easy to understand. When it comes to other brokerage firms, they are, in my opinion, a lot more highly qualified, but it's not as easy to understand. So, just to get people to start investing, uh, the avenue that I've chosen to use is Robinhood. So, as you can see in the portfolio, I'm hovering around 525. Oh, look at that movement right there. It's readjusting itself from the long calls that I have in place right now. And XLP did just take a large jump. Now, I'm going to talk about a few things that I want to share. And I've been trying to get family and friends on board when it comes to buying these specific shares of stock from specific companies. And I sent out a couple messages yesterday about, well, for the past couple days, about the stock splits from Apple and Tesla. And then if you have a certain amount of money set to the side to invest in those companies specifically. One thing I also want to go over is the date that's coming up is September 18th, which is called quadruple witching. And they get it from the old folk stories called the witching hour. But basically, they're predicting a great massive fall in the stock market because four different type of contracts are going to expire on this date. So a lot of banks that hold a lot of contracts, they're going to start selling out of positions. So between September 14th, which is Monday, and September 18th, which is Friday, there's going to be a lot of movement in the stock market going down. So as you can see, um, I'm hovering now around 539. I've made a gain of $17.56 so far, and that's just with the long puts that I have in place. Now I do day trade. I day trade, and I have goals as a day trader to make at least $300 a day. When I get there, I know that as a day trader, I'll be able to do it full time. When I get to $300 a day, I know I'll be able to do it full time, and it can take the place of my earned income, so I wouldn't have to go and trade hours for dollars on an hour. So how are we doing in the economy? How are we doing in the economy? The economy itself is not doing so good. It's not doing good at all. Um, the stock market is doing very well. And there's a lot of people that think that the stock market and the economy are the same thing, and they are not. And I would like to show a video to explain um, the difference between the stock market and the economy. But before I do that, I want to take a look at Yahoo Finance, and I'll give you an update on the indexes. So the indexes so far, we have the S&P 500. They're up almost 13 points. They're around 3,539. They're up almost 13 points. The Dow, they're up 89 points. The NASDAQ is up 83 points. All of them are in the green right now. Even the Russell's in the green. Crude oil is in the green. And I think by the end of the day, at least by the end of the week, gold is going to be back in the green. And if we look at the volatility index, it's hovering around 26. That means right now as we speak, since the volatility is in the red, when the volatility is in the red, that means there are a lot of people, a lot of investors, a lot of banks that are investing right now. And it could go either way. It could go up or down. But as you can see, just by the indexes, we have a lot of green activity, a lot of positive activity. So the stock market is doing well. I'm up 18 bucks, and I'm basically up off of the held positions that I have. I own some real estate stock. I own some shares of some energy stock, and then I have what they call fractional shares of my tech stock. And on Monday, the first day of the stock split of Apple, I was able to purchase Apple, one share of Apple. I just got one share of Apple for $128.37. Now since Monday, it has went up $6 and some change, and I think daily it's going to continue to go up. I've been talking about Apple for a few months now. I even had some friends that got into the fractional shares early and went on ahead and started cost averaging Apple, which is pretty good. Big ups to them. But one of my plans for Apple is to do dollar cost averaging. So I planned on putting in about $80 a month towards Apple. Now I know $80 is not going to buy a whole share. It's not going to buy a whole share, but within 2 months it should buy a whole share. So that's my dollar cost averaging. I'm gonna put about $80 towards Apple each month, monthly, and then I'm gonna just watch it grow, because most of the performance in my portfolio in Robinhood is coming from Apple, just based off of this. I do have some ETFs in there. And one thing I like about ETFs is like it takes a grouping of many different companies that they invest in. And how to find that out, I'll give you an example. How to find out what the ETF is invested in, we'll look at SPY. SPY is an ETF of the S&P 500. And I will go to Yahoo Finance, go to the search box, and I would type in SPY, hit enter for search, and they come up like this. And if I go to the tab over here and in the SPY that says holdings, once I go to holdings and I scroll down, it lets me know everything that the SPY is invested in. Now, who's at the top? Microsoft, and then Apple, and then Amazon, and then Facebook, and then Google Class A and C, and then after that is Johnson and Johnson and Berkshire Hathaway Class B. And then after that is Visa and Procter and Gamble. So these are the companies that the SPY ETF invest in, and the percentage of the assets that they own in these companies are on the side. So for Microsoft it's 6, for Apple is 5.75, for Amazon is 4.49%, and so on going down. So the S&P 500 ETF Trust SPY, it's fluctuating based off of those companies. So I spoke earlier about the economy and the stock market, and I would like to play a small video that explains the economy versus the stock market and how they're not the same, but some may think they are the same and they're not. And it gives a illustration of a man walking a dog. Check this out.
I like to use an analogy of a man walking a dog across a park. Try to picture that. You got a guy, he's got a leash, there's a dog on the other end of it, they're walking in the same direction. However, if you observe the way the man crosses the park, his gait, his stride, it's fairly straightforward, very few deviations, kind of like an economic trend. Then when you think about what the dog is doing, the dog is running around like a lunatic. The dog is barking at people, it darts to the left, it darts to the right, it strains on the leash, maybe it chases a squirrel, barks again. The thing with the dog is, that's the stock market. The man walking the dog is the economy.
Seems like it's pretty straightforward, but I think that's a good analogy. To further understand, I'm gonna skip ahead in this video to where how you could tell the economy is doing versus the stock market, and who takes care of the economy, because we know that the economy takes care of the stock market, but it's not the other way around. So I'm gonna play this for a second.
I would mention, if you think about the dog analogy walking through the park, a lot of stock market participants expect the Federal Reserve to watch the dog, and to some extent, the dog is worth watching, but I do think it's important to realize Jerome Powell, the Federal Reserve Chairman, His real job is to focus on the man walking the dog. And so you may see a lot of volatility in the markets that doesn't necessarily get a reaction from the people who set monetary policy.
So that was a little message I got off of CNBC. Watch a lot of news off of CNBC concerning the stock market and the fluctuation of the stock market and how the economy is doing as a whole. So I know that news, economic news, natural disasters, and weather, period, they play a big part in the fluctuation of the stock market and things that happen on the economic calendar. So I also recommend that if anyone is going to do any day trading, that they also take a peek at the economic calendar. And the economic calendar, the news that's going to be projected off of the economic calendar, should give you some type of detail on how certain companies are going to act in the stock market in a certain way. For an example, I go to marketwatch.com/economy politics calendar, and in this last Thursday, I was able to make $100 off of what's called a swing trade, and that is at the end of the day before 4 o'clock. I say about 3:45. I put in a put option because I knew that Thursday morning on the economic calendar they were going to go over jobless claims, initial jobless claims. And they're doing the same thing tomorrow on Thursday, September the 3rd. 8:30 in the morning, they're going to go over initial jobless claims, regular state programs. They're going to go over federal and state initial jobless claims, continuing jobless claims in regular state programs, and continual jobless claims. I mean, it keeps on. So it's like what I see is negative, 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 negative news, and all this is happening at 8:30. Unit labor costs revision, productivity revision, and then market services PMI final for the month of August. So up until I say all this 8:30 is it's not terrific news. It's not any good news until you get to 9:45, 10 o'clock. So it looks like there's going to be in low productive companies tomorrow morning. There should be a slight dip in low productive companies, and I'll give an example. We'll look at Micron. Micron, I like to short Micron because Micron hasn't had any big updates in the chip market. They even had to, because of the pandemic and not having as many workers as they did before, they had to put off on a project, on an event that was supposed to happen. So when you look at Micron, they're not prospering as much as you say like an AMD. You look at Micron, its 52-week high was at $61.19. They should be around their 52-week high right now, but right now they're trading at $46.95. which is good because the company is still alive, but they are undervalued right now because of the setbacks that they have had. So tomorrow, I think Micron is going to take a slight dive, slight dip, and they did the same thing last week when they had the initial jobless claim on last Thursday. Check this out. I'll go back a week, and last Thursday was, let me see, last Thursday was the 27th. So let's look at the 26th. Oh, it ain't gonna let me do it. Hold on. When we look at the 26th, it was around $45, 9 cent, $45, 2 cent, $44, $45, and then we get to 4 o'clock. They still having around $45. And then the very next day on the 27th, they had this big dip. Just boom. They had a dip down to I think it was $44.13 because I actually put a put in, and when I put the put saying that they were going to go down, I cashed out at around 101. So I made like 101 just based off of the economic calendar. So I look at the economic calendar, and then I also look at the analytics, technical analytics, and reading charts. So we take a look at the SPY like we did before, and I go to the full screen. It says chart is not available. There we go. So we look at the full screen of the charts, and just looking at it, look like it's on a downtrend right now, and it should pick back up around, yeah, around here. So it's on a downward trend right now, and it said $354.16. And I'll also add indicators like a Bollinger Band, and instead of using the 20 period, I use the 10 period, and it lets me know the ranges that it's going to fall in within the next come up or the next go down. When it starts to go outside of the Bollinger Band, that's how we know that it's a lot of bank activity that's happening within the market. So yeah, it's slightly on the downtrend, but it should go back up and hit another all-time high for today. My plan for the rest of 2020 and is to be in the positive on the percentages gained for the whole year, and that should be done by December the 18th, 2020. My long-term plan is to make $300 a day to replace my earned income. But my short-term plan is just to make 11% a week for 11 weeks. I'll make 11% a week for 11 weeks. I'll be on track for 2021, the summer of 2021, to hit the goal to bring me home full time to do day trading. So I've learned a lot. I read a lot of books. I think I put up about 11 books that I've read. I haven't put up any more books. Still reading some more books, but I learned the further that I go out and the less implied volatility, the more income that I could bring in, which will greater my chance of percentage per week. So looking at my percentage for the last week, I'm up about $9, almost $10 for the last week. Could have been dangerously low yesterday, but for today I'm up 3%. So those are my goals. I have my goals also in front of me, uh, basically reminding me to stick to the plan, because I do have a plan. Stick to the plan. Continue to buy into the market, dollar cost averaging. Um, yeah, that's what we're gonna do. If you have not invested in Apple or Tesla, you still have time to do it. If you look at Apple right now, Apple's going down. It started out at 136 today. Right now it's at 132. So if you plan on buying Apple, it's still a good time to buy Apple. After September the 28th, it's gonna start going right back up. So take advantage of the time. If you do get an account with Robinhood, um, if someone sends you an invite, it'll give them a free stock, and as well, it gives you a free stock. If you invite someone else, it'll give you a free stock and also give them a free stock. Um, Take advantages of the free stock. Hold on to them, even if you don't know the company specifically, but just hold on to them. As long as you can. At any time, I think after 3 days or a week after you had it for a while, then you'll have the opportunity to sell it if you want, but it's up to you. Um, this is a game. This is a opportunity that, as people like myself, it wasn't given to us openly. It was pretty hidden for a while, and even today, when I talk to people just to do a small investment outside of their 401k or their Roth, um, it seems like a little bit too much. You don't have to. I'm not telling people that they have to day trade. That's just something that I choose to do. But if you just have a few dollars instead in savings, instead of spending it, uh, set it to the side and just buy some shares in stock and watch it grow. It's called compound interest. That's all I got for today. You have any comments, concerns, shoot me a message, and I'll try to answer it the best of my ability. I'll be back next Wednesday at 9:30, and I'll throw out some messages on Facebook here and there, but it won't be any live uploads until next Wednesday. You guys be safe. Remember to care for the ones that you love and love the ones that you care for. This is a slow game. It's not a get rich quick anything. Slow money is still money. You guys be safe. Peace.